Hi, I'm Joe Guinan. I'm sitting here with market strategist Andy Busch, and we're going to ask him a few questions about what's going on in the economy and what's going on with Fed policy. Andy, I want to ask you a little bit about the U.S. domestic economy. It's interesting the sort of change in events we've had this year. We see corporate profits softening a little bit, so maybe corporate America has already run full gamut. And yet we see the consumer maybe better positioned than ever. Household balance sheets, consumer balance sheets are in good shape. Employment is doing really well. How do you see this playing out for the U.S. economy, let's say for the balance of 2015 and 16? Do you think that we continue to see strong employment gains even though corporate America is a little bit less profitable or less profit growth? Or do you think the slowdown in profit growth hurts employment? Where do you see that playing out?
Well, I think the growth in employment will hurt corporate earnings because they're going to have to pay more for these new employees to get X amount of new sales, right? They're bringing people in because things are growing, but when you do that, your labor costs go up. So you may not see it translate into earnings right away. Also, the slowdown in Europe and China has really impacted a lot of companies. I think half of the S&P 500 gets their earnings from exports, right? So we know that those companies have been hurt. And also what's interesting too is the dollar. The US dollar has really strengthened. It's strengthened 20% over the last year. And that's hurt, again, exporters who are sending stuff overseas, made their products more expensive overall. So we know earnings are getting hit. And then just finally also with the Fed raising rates, as I've mentioned, and your discounted cash flow models, your denominator is getting bigger. So that means your values out in the future are getting less, and so people start to retrench what they think those values are and what their worth is. So overall, it's really a question. We got up to about 18 times earnings on the S&P recently. We've kind of backed away from that a little bit. So looking into 2015, you look at earnings, they're going to start pretty soft in this first quarter. We know that because of some of the weather-related issues. It will be fascinating to see as we get through these earnings. Again, it's not exactly what the earnings are, but it's what the guidance of these companies are telling us for the rest of the year. If those are still pretty good, then the stock market will hold these levels. If they're really opaque and really kind of like misty, I don't know what's out there, that would worry me more, and I think that's when you'd start to see the stock market back off.
Mm-hmm. Well, thank you very much. This is Andy Busch, market strategist. I'm Joe Guinan from Advantage Futures. Please visit our website at advantagefutures.com. Thank you.